Hello and welcome to this new blog post on sustainability accounting. As usual, our disclaimer here. And in today's webcast, I would like to focus on sustainable strategic planning, budgeting and forecasting. The focus is here actually on the strategic planning and the simulation of the planning results. But before we come to this point, let us have a look at the strategic planning process. And the slides that I share, they are taken mainly from the Accounting for Sustainability website, where you can find this graph that shows that the strategic planning process is one of the first ones our integrated management reporting process is using. And this first process, this sustainable strategic planning, can be broken down into 4 elements. So first of all, you assess the organization, the mission, vision, the context, and so on. Then you set strategic goals, and then you determine critical success factors, various risks, enablers, and so on, in order to come up with some high-level activities and initiatives. And let us quickly go through these 4 elements so that you get an idea what tools you can use, especially in the context of sustainability accounting. So here I listed you a couple of tools that especially integrate sustainability accounting ideas when it comes to assessing the organization strategic context, so to say. Then the next key point in the process is to set the strategic goals. Also here, this is something that you can find in many finance and accounting textbooks. What I would like to focus on in the later part of this blog post is the last part when it comes to scenario planning and analysis. Here, this slide is quite important because it identifies critical success factors based or through a sustainability lens. So here's the sustainability lens in the middle, and based on that we can get different risks, different barriers, different enablers that we have to incorporate into our strategic planning activities. Okay, and also here just short the high-level activities and who needs to be involved and what needs to be considered. Okay, so after this short introduction, let us now think about how can we make a scenario analysis, especially against the background of the sustainability ideas. So where can we actually get this data from? So data on CO2 emissions over the next couple of years, data on the population growth, on the energy consumption and grow over the next 20, 30, 40 years. And the good news is there's something available. You can find this tool or this toolkit if you search for the Census Toolkit under climatescenarios.org. And before we jump into this toolkit and what you can get from there, let's have a look at the process and what this tool is doing and what it is giving to you. So the whole process starts here in the upper right hand corner with socio-economic developments. So these are assumptions based on what will happen in our economies from a social perspective. Then the next point is, what do these assumptions mean for the energy and land use? And what does the land use, how can it translate it into emissions and into climate change so that we can make an impact analysis? So that's the whole circle of the census tool. And now let us have a look at some key terms and concepts. So the starting point are these socio-economic pathways. So the first point is you have to decide on what do you expect from the society, the economy that you're living in. How will it develop? Will your country, your environment move towards a more sustainable economy, where you put much effort on renewable energies, or do you just continue as you are, or does your country put a big focus on fossil energy? Then you would probably focus more on this SSP5 scenario. So these are just different pathways that give us an idea, how can we classify different countries, regions, economies. And now the thing is that these SSPs, they can be translated into quantitative projections. And this is done with IAMs, integrated assessment models. And what they are doing is they try to establish a connection between these different pathways and what they mean for GDP growth, for capital stock, for energy use, and so on. And based on that, they can make predictions. So they can say, okay, under an SSP1 scenario, we expect the population to develop like this over the next 100 years. The GDP will develop in this way based on one of these scenarios, and so on. So you can really get an idea what will happen from a macroeconomic perspective. But okay, now, since we are dealing with corporate IT mainly and with corporations, this data is a bit difficult to condense for us. So let's have a look at how the story goes on. Well, the next thing that I listed you here are RCPs, representative concentration pathways. And this is what you know probably from the media. So when you hear, global warming should not be more than 2 degrees Celsius over the next couple of years, or it can go up to 4 degrees. And these RCPs, they are basically translating this temperature into watt per square meter. And if you remember from one of my previous presentations, then I used this kind of illustrations where you can see different effects of global warming on our planet. So on the left hand side we have RCP 2.6, which means basically or assumes a global warming of 2 degrees. On the right hand side we are above 4 degrees. Okay, and now the important thing is that you can combine these SSPs that we had a look at in the beginning with the RCPs. So you can say, okay, what happens if my government is probably on a SSP1 pathway and we set a specific goal for global warming. And based on this combination, you can get an idea what should the energy price or the CO2 price be based on one of these scenarios. So that's already one thing, because the CO2 price is currently something that is voluntarily implemented in a couple of countries, but it might be the case that this will be a kind of tax that will be imposed in the near future, and that has a real effect on costs and revenues of companies. Okay, then there is something called ISIMIP, Intersectoral Impact Model, and they help us to get an idea how crop failures, floods, and other things will develop over the next years based on the different scenarios that we have and the climate change. So here on the on this axis you see the expected climate change, and then you can assess what does it mean for the number of floods, for the number of crop failures, and so on. And all of this can be extracted from this climate scenarios toolkit. So there's really a database that you can tap for free to get an idea about different scenarios and how things can develop. And let us have a quick look at this toolkit. Okay, so here's the climate scenarios toolkit, or the scenario finder. And if you see this the first time, you might feel a bit confused, but some of the things you can easily assess. So you can select scenarios, for example, that give you data for an assumption based on a global warming of above 2 degrees Celsius. Yeah? Then you have here different models that you can select from. If you see this the first time, it might look a bit strange and weird, but there is here a reference that explains what is included in the different models, what assumptions are made, and so on. So based on this, you can tap this scenario and explore it. And this is what I opened here in the next tab. And what you see here is first the category. So I said, okay, I have here different scenarios for above 2 degrees Celsius and 1.5 low overshot and so on, and here different projects from different research institutes and organizations. And based on that, I can select here the data. So for example, I can select here data on CO2 emissions, or if we scroll down, NO2 emissions and so on. But it's not only on emissions, it's also on GDP growth, it's on population growth, the risk of hunger, rural development, urban development, and this can be broken down by regions and so on. So you can really get a good idea how the different models expect, in this case, the GDP per purchasing pricing parity to develop over the next years. Here from a very high to a very low estimate. And what you see in the pop-up boxes, these are the different models or scenarios. So this is really a good instrument that gives you an idea how important factors that influence your strategic planning might develop over the next couple of years. Okay, so let us go back to the PowerPoint and see how we can use that. Okay, so we are back here in the PowerPoint, and after this short demo, I listed you here some selected time series variables that might have an impact on your business. So there's really a lot of data available that can impact your strategic planning efforts. And I highlighted you some of them that are basically independent of a business sector, and are in general available and usable, of course. But now let's move to a specific example. And this example is making use of basically this concept that is from the Accounting for Sustainability website. There's a guide available there on strategic planning where I take this from. And the key message of this is that you have different drivers: globalization, changing regulations, growing population, that you can, for example, get from the census tool. And then you have different risks, also this climate change, the resource scarcity, energy security. All of this data can be tapped and extracted from the census tool and can help you with your strategic planning. Okay, so what is the specific example that I'm looking at? So here I just listed you a couple of accounts. So on top, if we start on the left, you see the external sales. So I have product sales, I have revenues for services and other revenues. And I just said, okay, that's my external sales. And at the bottom, I have different costs. And these are just main accounts that I used. These are just selected ones. So these are it's not a complete chart of account, because I just want to illustrate you the things. The important thing here is this environmental impact. I did not include it here, but there's also an impact here, of course, on sales and so on. But here you can see that higher energy costs will probably give rise to higher freight and transportation costs. More severe storms will give raised to higher insurance expenses, and so on. And all of these effects can be assessed from this census tool or other tools that you know. And they help us to get an assessment of the risks and of the drivers that define how our costs and revenues will develop, and how they will not only develop within a given structure. So for example, energy costs might get relatively more expensive and important than travel expense or something else. Yeah? So the impact is not only on this structure, but also on the timeline, on the time structure. Yeah? And what I try to do in the following is, I try to incorporate the different risks and the drivers by implementing budget plans. Yeah? And then playing with different growth rate, with different risk factors and allocations among them to see how our company will develop under the different scenarios. Yeah? So for this and the following, I created basically 4 budget models that I called simulation 1, 2, 3, and 4. And what I used is, I use always a specific budget plan. A budget plan A for the sales, a budget plan B for the costs. And then I change a small variable, run the budget planning process again, and then try to see what is the effect on the total cost and revenues of my company. So to get a simulation of that. Yeah. That's here a screenshot of my report. But let us have a look at my system and how it is actually working. Okay, so I'm now in one of the Microsoft Contoso demo environments. I selected the German one, DEMF here, but it doesn't really matter what you choose. What I want to do is, I want to record a budget plan. So let us do that and then see how this works. And for that purpose, I created 2 budget planning processes. One for sales. So let's give it a name, English 1, and then create it. And what I'm doing here is, I just select a summary account. So this account is not an account on which you can record transactions. It's a summary account of different sales accounts. Yeah? And what I'm doing is, I say, okay, I do not know how much product sales I will have. I do not know how much service and other sales I will have, especially over the next years. But I know, okay, starting from a base, which can be my budget for 2021 in this example, I can start and say, okay, I expect 1 million. That's my starting point. Maybe this can be my last year's sales, or it can be the forecasted sales for 2021. This is just a starting point for me that can be entered, or you can even import it from actual transactions or from another file. The thing is, that's all what I need to start this budget planning process. And I have to do something similar for my costs. So I have here budget planning process for costs. Let's call this English 1. And then I say create. And what I'm doing here is very similar. I have one summary account. On this account, I cannot record a transaction. And now the question is, okay, what is the cost basic that you expect? And I said, okay, 780,000. That's likely what I'm having, and that's the starting point for my simulation. And then you send this through the workflow, which is basically completing the whole budget planning process. So if we close this form here and refresh the site, then the sales process is already complete. And if we open that, then you can see the following, that my summary account has been replaced by the actual sales accounts that I have for products, services, and others. And then we can see that I have a specific growth scenario implemented that give me the different growth rates and numbers for the different years. And then, of course, something similar should happen for the costing side. Let's see if this one is also finished. Yeah, it just says complete. And also here you can see that you get a breakdown of the different costs and a spread out over the different years based on a specific scenario. The scenario that I have is based on a budget planning configuration. And here I have different allocation schedules. I will not show you in detail, but just give you an idea how this works. So I have here an allocation schedule that distributes the cost according to one specific rule. And you can now, after you run a first scenario, you can change this and run it again. And the same happens for the cost distribution over time, where I have here a key that I selected and that distributes the amounts over the different years based on an assumed growth rate. For the cost, that's the C, and here for the sales, where I have a different assumption. And these elements basically give me then here the data. And what I can do then is I can transfer this to my budget model. And here I choose just a different budget model. I say that's simulation 4. Generate this one, and let's do the same for the cost element. So here I also say let's transfer it to this budget model, simulation 4. And if we go then here to my budget register entries, and if we refresh that, then we see, okay, here is our simulation 4. And the last line that I highlighted, these are the costs. So according to the simulation 4, I expected cost of 4.282 million. Simulation 3 expected higher costs. Simulation 1 also expected this kind of costs. So you can really play around with different costs and revenues that you expect over the next couple of years just by changing a little parameter in the budget plan. And the outcome is then, of course, here a report that shows you and compares the different simulations. I have not run it for the last simulation that we just run, but for the previous ones. And what you can see from here is that you expect different product sales, different revenues. And also here, if we go further down, we can, for example, see what do the different scenarios mean, for example, for business. So here in scenario 3 or simulation 3, it basically doubles from here. Or you can see what is the effect on our insurance expense. And all of this gives you an indication, hey, is there something that I need to do over the next couple of years? Because if I'm not acting on this one, then I might have a problem. Okay, so that's what I wanted to share with you. Because of the complexity of the setup of this budget planning configuration and the time it needs, I will create a separate blog post where I explain you how to set up the budget plan, the workflow, and all of this. But for today, I just wanted to show you how you can apply it. So now let's go back to my PowerPoint for some closing hints and notes. Okay, so after this short demonstration, let us quickly have a look at the summary and the things we investigated. So first of all, the Census toolkit that I introduced you, that's a good tool to get some information that can help you in your long-term strategic planning. So please take a look at this and what data you can use for it. Then next thing is, by using the data from there and applying different risks and growth scenarios, we can actually analyze the impact of environmental effects on our corporate development. And we can simulate that in an easy way. So it just takes you a couple of seconds to switch a parameter in the budget plan to see different outcomes. And all of this is done in a standard software. So you do not need a specific scenario planning analysis tool. This is something that can be done out of the box. Okay, but as I said, in the next blog post, I will give you some more details on the budget planning configuration and what I used to set up these scenarios and how you can replicate that. But for today, I would like to thank you very much for your attention and would like to close this webcast. Thank you.